and welcome. Good evening, viewers. This is Malika Mishra and you're watching Ask Profit only on NDTV Profit.
And I'm your host Himakshi Bahugna, and together we'll be taking up all your stock related queries. So don't forget to WhatsApp us or call us directly. Viewers, both the numbers are flashing on your screens right now. And on the show, we are joined by Prashant Tapse on the fundamentals, and our technical guest will be joining us shortly. Welcome to the show, Prashant.
Very good evening.
Good evening. Good evening. Now, let's get straight to the first query on the show, which is written to us from Bangalore. Pramod is holding 10 shares of AIA Engineering at 3,800 rupees, and he's looking whether he should hold or sell the counter. So, what's your fundamental outlook on AIA Engineering?
Fundamentally, very decent company, but for a near term, I think there is some kind of a hurdle with respect to its quarterly earnings. Q1, Q2, and Q3 were not so good. I think even the same trend can follow in the Q4 earnings, which is very much due now. So I think that is the only one reason why in this last 15 days, where markets have rallied well, but AI engineering has not done well in this market. So I think there should be a stop loss he should maintain if the stock goes down below at least by 3,090. So there should be a stop loss maintained, because if Q4 earnings also continues to be bad, I think there will be another 10% downside which can be expected in next one quarter. So my advice would be maintain a stop loss and then hold.
Okay, got it. So, maintain the stop loss. Well, Rajesh Bhosle, our technical expert, has joined us for this evening. Welcome to the show, Rajesh. Let's go to our next query. Angel has written to us from Mumbai, and he or she holds 1,000 shares of Bank of India at 107 rupees a piece. They're asking how much can be the target price for both short-term and long-term perspective. Angel is currently sitting on a profit of close to 12.87 thousand rupees, and the stock was also up close to 2.5% in trade today. Prashant, I'd like to take your fundamental view on Bank of India, because it excites me that it comes to the banking space and Nifty Bank has performed so well. Do you think Bank of India is also a beneficiary of the kind of rally that we're seeing in the space?
I think yes. Again, I'm very much positive on the PSU sector banks, but again, Bank of India is one of the mid-cap company in the banking space, that too in the PSU segment. With respect to again valuations, things are very much at a comfortable level. I think upside is still way away from the current markets, and I think my advice would be on a hold position with at least a target of 140 to 150 for another 6 months. But overall, PSU as a sector will perform very, very well. I think the consumption story will also come into play very soon from the first month of this financial year. So overall, very positive to hold.
Rajesh, I'd also like to get your technical expertise on Bank of India. Given how the charts are performing, if somebody is accumulating more shares of this company at the moment, what would the ideal price for accumulation be, and what would your target price for the long term for Bank of India be?
Well, good evening, and thank you for having me on your show. So as you highlighted, yes, the broader space on the banking space is doing very well, and initially the private banks were doing exceptionally well, and the PSU banks have started participating in this party. Now Bank of India, if we see the daily chart, we are seeing a fresh breakout, a saucer pattern breakout, and as per that, technically we are expecting a move towards 138 to 140 in the near term, and then possibly the stock can extend its move towards 160 in the long term. So any dip towards 110, 115 would be a great opportunity to buy on dips.
Understood. Thanks for that view. And just a quick reminder for our viewers, this is your chance to get all your stock related queries answered. So please don't miss this chance. Just call us right away. Pick up your phones and the numbers are there on your screens. And with that, we have a WhatsApp query written to us from Mumbai. Dheeraj is asking whether it's the right time to buy Godrej Properties at current levels. And he's looking for both technical and fundamental view on the counter. Currently, Godrej Properties is trading at 2,045 and was also up in trade today over 2%. So Prashant, talking about the fundamental aspect, in a competitive real estate market, how does Godrej Property actually differentiate itself to maintain and grow its market share?
I think yes, with respect to the real estate markets, one should always go with the top two leaders, and Godrej Property is a very conservative and long-term company which can be very much looked at as a portfolio stock. But again, valuation will be the concern at this point of time. Again, at a almost 40p and a price to book valuation of almost 6 is not so comforting me for adding at this point of time. So I would like to advise him to know if you would like to add it for a long term, start it like a SIP way, and then buy few at this point of time. And again, if it falls down by 100 rupees, add more at that point of time. Again, obviously that would be a strategy for him for a long term. Again, with respect to company corporate governance and a long term outlook, I'm very much positive on the long term.
Understood. And Rajesh, coming to you, talking about the current levels that he was referring to, currently trading at 2045. So are these the correct levels to enter, or do you suggest some other number there?
So in this current uptrend, Godrej Properties has not participated in this up move. But having said that, the stock is showing signs of bottoming out. If we see the long-term weekly averages of 200, there's somewhere around 1900 to 2000, there is a confluence of support. So 1900 to 2000 would be ideal level to buy. On the high side, 2250 and 2400 would be the immediate targets.
Got it. Understood. And now we have Ravi, our first caller of this evening. He's joining us on the phone line from Hyderabad. Hi, Ravi. Good evening.
Yeah, very good evening.
What's your question, Ravi?
Yeah, my query is regarding CDSL.
Okay.
So, is it a good time to buy CDSL, or shall I wait a couple of days? I can expect any correction going forward.
Okay, understood. Got it. Rajesh, let's address CDSL. CDSL has seen an uptick of close to 8% in the last 1 month and has been performing pretty well. Its 52-week high was around 917 levels. It is now trading around 1300. Still a lot more legroom to go from its 52-week 52-week low was 917, and it's still there's a lot more legroom to go until it reaches its 52-week high again. However, our viewers' question specifically is that the way it is currently trading, do you see more corrections possible in the near future, and what should Ravi do? Is it the right time to buy shares of CDSL?
So in the short term, we have a positive view on the CDSL. The entire capital market segment was doing well today, and CDSL, especially if we see there was a bullish breakout, fresh long formations were seen in the futures, and volumes were also pretty high. So we expect prices to move towards the 200 DMA place somewhere around 1430, and then there was a bearish gap left around 1500. So 1400 and 1500 is the immediate target we are eyeing. One who is buying can keep a stop loss somewhere around below 1150.
Understood. Thanks for that view. With that, let's go across to a caller joining us from Punjab. Hi, Vishal. Good evening.
Hello, good evening. Good evening, ma'am.
Yes.
I'm holding 500 shares of Ajax Engineering
Okay.
at a price of 717.
Okay.
I'm looking for 3 to 5 years, and 3 to 5 years basically.
Understood. So you're a long-term investor, and yes. So Prashant, I'll come to you on this. Since he's a long-term investor, currently it's trading at 719. It's basically hovering around the similar levels at which he's bought 716. So are you optimistic on the counter for long-term?
Yes, very optimistic on the counter, because I was very lucky to meet the management at the time of IPO. I even saw the plant in Bangalore. Very much impressive company with respect to the fundamentals. Even valuations are very much comfortable. I think he can go and buy this on every dip for a long-term investment. With respect to business model, again, it's into concrete equipment and service across the value chain of the real estate as well as the automobile industry. So I think a long-term investor should buy this on every dip. Overall, very positive.
Okay, understood. And we have another caller called Amal from Kerala. Hi, Amal. Good evening.
Good evening, ma'am.
What's your question today, Amal?
I was curious about Muthoot Microfin, both fundamentally and technically. I'm not holding the share.
Okay, you just want to know.
Yeah.
Got it.
I want to know how it. Okay.
Okay, Amal, I understood your question. Prashant, let's take your fundamental view on Muthoot Finance. The stock was up 14% in trade today, so very interesting move there. And it has been correcting for quite some time, but how do you see the trajectory going forward?
fundamentally, I think yes, I'm very much bullish on the NBFC as a space. So obviously, Muthoot Finance plays very well in this market, and the two a strong player in the South Indian, Kerala and Tamil Nadu market. So I think that would be the one reason why the stock was very much up. Valuation wise, very much comfortable. I think at this value again, this is a very cheap level again. 130, 160 and 175 can be a range to accumulate more. For me, a target for a long-term investor should be almost more than 200 rupees from the current levels. But again, every dip should be bought because the stock has already rallied a bit from last 3-4 days. So I think wait and watch, but buy for long term.
Okay, so while Prashant suggests buy for long term on Muthoot Microfinance, Rajesh, I'd like to know your technical point of view. Do you see this as a current level to buy? And what should the average strategy of an investor be when it comes to investing in Muthoot Finance?
So I agree with the Prashant, and I guess the stock name is Muthoot Microfinance, and the bias, yes, it's positive. And on the technical front, we have seen a double bottom breakout. So any dip towards 150, it's a bullish breakout level, would be a buying opportunity. On the upside, the immediate target should be around 185 to 190 levels.
Understood. Thanks for that. Now let's go across to a caller joining us from Bengaluru. Hi, Suhas. Good evening.
Hey, good evening. Thanks for taking my query. I'm your regular watcher.
Okay, thank you. Yes, please go ahead with
my
your
question today is, I have 155 shares of BHEL, bought at 461.
Okay.
I would like to know around 9 months to 1 year perspective.
Understood. And let me just come to you once again. You've bought 155 shares at 461 or 261?
261.
261.
And I also see the RSI is around 65, 66 range, the daily RSI.
Okay.
So just wanted to check, will it have a little bit more towards 300 in this run?
Right, right. And when did you purchase these shares, Suhas?
Maybe around January 2025.
Okay.
Before that, I didn't bought it one go. I accumulated it.
Understood.
Multiple times.
Yeah. Understood. So you're also a long-term investor. Prashant, coming to you, BHEL currently it's trading at 227 and he bought it at 261. So fundamentally, what is the current status of BHEL's order book and how does the company plan actually to drive revenue growth in the coming years?
See, with respect to order book, again, the order book is more than 5x from the current levels. But again, execution is the main area where BHEL is not having that kind of expertise from last three to four quarters. If you see even Q1 earnings again, that were not so impressive again with respect to margins again very much flat with 4% of EBITDA and again very much flat in terms of PAT growth as well. So I think Q4 earnings should be a watchful earning for me until unless it gives a better EBITDA growth from the current levels or PAT growth from the current levels. That would be very difficult for me to give a aggressive buy call. I think again with respect to valuation also very expensive at this point of time. I'm expecting the stock will go down towards 200 level if something goes wrong with the Q4 earnings. So my advice for him would be again wait and watch, add more when it comes to 200 and then wait for long term.
Understood. And Rajesh, coming to you on the technical front, what are the charts suggesting?
So technically, we are seeing a bullish formation along with the broader market. The stock has given an inverse head and shoulder pattern breakout. And also on the monthly chart, we are seeing a bullish engulfing. So going with the current momentum, possibly the stock can head towards 242 to 42 levels. As the viewer highlighted, it's the 200 SMA. So around 242, 243, we'll have to recheck those levels. And if something is positive and if we sustain about that, then the stock prices can extend further towards 260 zone.
Okay, got it. And now we have Shrikant. He's joining us from Hyderabad on the phone line. Hi, Shrikant. Good evening.
Good evening, madam.
Please go ahead with your question.
Madam, mid cap and small cap IT sector, madam. And after sector lo investment is stock recommendations, madam. After sector.
What sector?
After, madam.
Okay, understood.
IT and after sector lo. Stocks is a long term, madam, 10 years holding, mid cap and small cap, madam.
Okay. Let's talk about the IT space, gentlemen. IT has been such a talk of the town because of Trump's tariffs looming global, Trump's tariff actually triggering global uncertainty on a very large scale. IT companies have had a weak guidance. In fact, Wipro, TCS, and Infosys that came out with their results, have reported weak results and also a muted outlook towards the FY26 or 27 earnings as well. Now, with a weak atmosphere for IT, would you recommend investors to invest in the IT space, even if that's for a very long term? For example, in Shrikant's in Shrikant's case, he wants to invest in IT for the next 10 years. But given how IT is performing, do you think it will be the winner even after 10 years? And Prashant, why don't you take your fundamental analysis on this first?
I think you rightly pointed out, because the Western countries, again, the sentiments are still not so positive. The biggest companies like Accenture always has already given some kind of hint with respect to their IT spending. Their clients are spending very less for this financial year already. So obviously, Indian IT companies will get some kind of similar reaction in terms of earnings show. We have seen almost the top 3 companies have already reported a very flat to negative earnings show, as well as guidance is very much flat to negative again. So I think my advice would be for the clients to wait and watch for at least for 1 or 2 quarters. Let's see how things will go, and even the tariff room of around 90 days. Post 90 days, how things will work out. IT and pharma will be 2 sectors very much highly focused with respect to tariff war again. So my advice would be wait and watch, not to jump into the stock right now. If you want to again invest, don't go for mid caps, go for large cap only like TCS and Infosys, and buy only like SIP model, again, buy few shares every on and every day.
Good advice coming in from you, Prashant. And Rajesh, I'd like to get your technical analysis on this as well. Now, speaking about some of the IT large cap companies, the way they're performing, what kind of growth do you see penciling into these stocks, even from a long-term perspective? And number 2, would you recommend investors to go into those traditional IT names and invest there, or should they concentrate on which IT companies are segueing into AI, because that's a theme and the future of today that's going to evolve and strengthen the space? So give us some clarity over there as well.
So if you see the entire IT space, so they are placed on the long-term support levels on the technical front, but the recent bounce has been along with the broader markets. But we don't see signs of any outperformance, and we need to have some clarity for bullish reversal. So banking and the financials are the one who have led the rally, and we expect the performance to continue there. So we would suggest to avoid IT space as of now until we see a clear sign. And if one has to go on the IT front, I would reiterate what Prashant has said, that go with frontline counters. I would add Tech Mahindra and HCL Tech, as they are showing more better signs than the other mid cap or small cap space.
Understood. Now we have a caller joining us from Gujarat. Hi Shivam, good evening.
Good evening, ma'am.
Yes, how can we help you on the show today?
Yes, ma'am. I am holding Vishal Mega Mart stock.
Okay.
My buying price is 109 and I am holding 400 quantity.
Okay.
Ma'am, I can hold it for short to mid term.
Okay.
But I want to know, is this the right stock that I choose for a particular in this segment, or shall I go with DMart or other one?
Understood. Prashant, again, he's a long-term investor, and currently it's trading at 113 and was up in trade today over 3%. But talking about the fundamental view on Vishal Mega Mart, so are you optimistic on this company? And also, is it advisable for Shivam to stay invested in this company, or should he actually, switch to some other company in the similar space?
I think you should diversify, the eggs into different baskets. Only focusing on Vishal Mega Mart may be, a risky one. DMart can also be part of the story. Even Trent can be also the second story which he can add with respect to the growth of the consumption story. But obviously, yes, I am very much positive on the Vishal Mega Mart as a story with hypermarket chain, which is growing very fast. I think the locations which they have chosen on the northern side of India, that has a lot of space, lot of consumption story will come in as soon as we come into this first quarter of this financial year, where the under 12 lakhs will be a tax-free, and that money can go into these kind of businesses. So overall, on a long-term basis, very positive with a target of at least 140, 150 from the 12 months period from current now. But again, my advice would be have another 1 or 2 stocks like DMart or Trent into his portfolio so that the whole basket can perform very well.
Understood. So diversify your portfolio is what Prashant is suggesting. And Rajesh, coming to you, for a new investor who wants to, invest in this company, so are these the correct levels to enter?
Yes, today itself we have seen a price pattern breakout. The stock was earlier facing resistance around 110, but today we have seen a double bottom breakout. So possibly with this price and volume breakout, the stock can move towards the levels of 120 to 122. So having a positive bias, if anyone is going fresh long, 106 would be the stop loss.
Okay, got it. And now we have M.R. Reddy calling us from Andhra Pradesh. Hi, M.R. Reddy. Good evening.
Good evening, madam.
Please ask your question, sir.
Regarding Ramky Infrastructure,
Okay.
I purchased 2,500 shares at the rate of 450 rupees.
Okay.
And the fundamentals and the technicals of this, madam.
Technicals of this stock. Okay, okay. And you bought these 2,500 shares together 1 year back, correct?
Yeah, recently.
Okay, okay. You bought them recently. Okay, and you want to
recently.
hold for a year or
1
so.
year. 1 year.
Okay, okay.
1 year.
Understood. Rajesh, how do you view Ramky Infrastructure trading? How's the pattern looking? Because M.R. Reddy, in his recent purchase itself, has been able to sum up a profit of around 1.5 lakh rupees. What would you suggest M.R. Reddy to do? Because he bought them at 450. The stock is now trading around 508 rupees. In fact, it was up close to 5% in trade today. What's working and how's the pattern looking?
So the overall pattern continues to look positive and we are seeing a W pattern. Possibly the stock can head towards 200 DMA, placed somewhere around 600. That also coincides with key retracement level. So as of now, in short term, expect levels of 600. And on the downside, 475 to 480 is a very strong support for the counter.
Okay, okay. And Prashant, since both of us, we saw that he's sitting on a handsome profit, would you suggest him to exit the counter, book his profits or book partial profits? Because God forbid, in such uncertain times, somebody making 1.5 lakh of profits is not avoidable or ignorable. What would your suggestion to M.R. Reddy be?
I think continue to hold, but again, my colleague, you should give a stop loss to him. So stop loss should be obviously in the profit right now. I will advise him to continue to hold. I think the Q4 earnings will be better than expected from the Q3 comparison. So I think my target would be another 10-15% momentum can be there in the stock in a very short term period, and then he can think of exiting at least 25% of the portfolio above 550 levels. So overall very positive, and the sector is very good right now. Even with respect to valuations, again the stock is trading at 10p, price to book value is almost like 1.8. And the ratios like ROE, ROC and are all 20% plus. So the situation and the picture is very clear right now. And downside is very, very limited. If something goes wrong with Q4 earnings, then only the stock can come down. But overall, keep a stop loss and a target of 550 plus, and then think of exiting 25% from the portfolio.
Okay, so attractive price and great set of metrics also working for this particular stock. But quickly, Rajesh, could you give us a stop loss for Ramky Infrastructure at the moment?
So 470 looks a very decent base for the stock, and as a trailing stop loss, 470 can be kept as a stop loss.
Understood. Now let's go across to a caller joining us from Bengaluru. Hi Kushal, good evening.
Yeah, good evening, ma'am.
Yes, how can we help you?
So I'm looking for a trailer like Transformers and Rectifiers Limited. So after my research, I came to know it is a very multi-bagger return.
Yeah.
So because of its very good order book in the future. So, but my main concern is the P is trading at a very premium like 72. So is it the right time or should I wait for some correction in the P?
Understood. So you want to accumulate, you want to enter, you basically want to purchase transformers and rectifiers, and you're looking for the right levels to enter, am I correct?
Yeah. Correct. Because it is having a very good potential. So I'm little bit confused whether the P will be getting corrected or will it be trading in the same level. So I need to
Okay. So Prashant, the PE ratio, do you see it correcting, in the near time? And also, if we talk about the stock performance, it has jumped actually more than 18 times in just last 2 years. So, what will be its future trajectory? If you could just shed some light on that.
He has done a bit good research on the stock. Again, obviously, yes, the valuation is a bit expensive at this point of time. Even price to book earnings is around almost like 13 times. PE correction, yes, there can be some kind of PE correction if something goes wrong with the earnings, which are expected very soon in the coming few days. If the market is assuming something and there will be some kind of pressure in the margin, and also obviously there will be some kind of similar kind of correction how the stock has rallied from last 15 days. So if the stock comes below to 500 rupees, again, I think that would be a very great price to again re-enter the stock for a long-term investment. But obviously one should keep in mind with a current ratio of ROC of 28% and ROE of 23%, such kind of premium valuation will continue to stay in the price. But obviously another 10% correction can be a good level to start investing in the stock for a long-term investment only and add every on dip.
Understood. And Rajesh, even you could just give us the clarity on the correct levels to enter transformers and rectifiers.
So yes, the overall chart structure remains positive. We are seeing high top, high bottom formation. The recent higher bottom is somewhere around 480, and the retracement levels come somewhere around 510 to 500. So any dip towards 500 to 510 would be an ideal level to buy on dip.
Understood. So buy on dip is what Rajesh is suggesting. And with that, viewers, we'll have to slip into a short break. But please keep sending in your queries on WhatsApp and call in. We'll be right back for Ask Profit. Stay tuned to NDTV Profit.
India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
The first stock on the list is it's IGL now. If you see the stock that has perked up around 4% in trade, and this is largely on the back of the buzz that is on the street, the company might announce a price hike of anywhere between 3 to 4 rupees from the 1st of April. Now this might as well happen in phases, so keep an eye out for IGL. Now this stock had to, the company had, in fact had to take a price hike post the Delhi election because the cost of gas had increased for them, and because of that the margins had come down, but they had not taken any price hike so far. So the street is expecting a price hike announcement to come in, which will be effective from the 1st of April, and it could be around 3 to 4 rupees, and it could well be implemented in phases. So keep an eye out for IGL.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
welcome back to Ask Profit viewers, only on NDTV Profit, a show where you ask your questions and we answer them through our experts. Joining us today is Prashant Tapse on the fundamentals and Rajesh Bhosle on the technicals. So do call in on the numbers flashing on your screen. You can also write to us on WhatsApp, but we do urge you to call in so that we can take your queries live and give you the best investment advice. Now, we have a caller joining us from Kerala. Tanya is on the phone line. Hi, Tanya. Good evening.
Wanted to know about Sky Gold. Okay. I bought around 100 quantity at around 300 rupees. So just wanted to know about its long-term perspective. I want to keep accumulating. Is it a good time to accumulate gold, considering that they're all at very year highs?
Right.
And if not Sky Gold, if I want to add some gold to my portfolio, what's a good stock to?
Interesting question, Tanya. I'd like to just cross-question and know, when did you purchase these shares of Sky Gold and what made you invest in this company?
Actually, it was just a recommendation from a friend. They said that Sky Gold actually provides to all the other gold-related companies like Kalyan Senco and everything. So they said they are the fundamental, the base company that actually... So they said if you want to invest in gold, then you should probably invest in Sky Gold, but I don't know enough about it.
Okay.
I've just done a basic fundamental analysis, but I want to know if I can hold this for long term, mid to long term. I'm looking at 3 to 5 years.
Yeah, okay, got it. You're right. It does, function on a B2B model. And from that perspective, it could, come across as an interesting stock. But Prashant, I'd like to take your view on Sky Gold and Diamonds. Tanya currently holds 100 shares at 300 rupees a piece. She has although made a profit of around 3,500 rupees. Her target is long term. She wants to continue investing in gold companies, or this one for that matter, for 3 to 5 years. What would your recommendation to Tanya be? And could you also give us your brief outlook on the space, since gold is being spoken about as a safe haven asset amidst a globally uncertain scenario such as today?
Like Tanya, again, I'm also very positive on a business model of B2B model. So that gives very much comfort with respect to their margins as well as growth, because they are giving some kind of outsourcing model to the top-notch companies like Kalyan Jewelers or any other jewelries in the market as well as in the local market. So they will be obviously they don't have so much of risk, because gold is very volatile right now and it is trading higher and higher. So it would be a risk for a company like Kalyan or any other seller from the B2C model concept. But B2B, obviously, there will be fixed margin which can be maintained by the company and then get into a profitability. So I think even Q3 earnings were better than Q4 earnings. That shows the company has capacity to expand the EBITDA margins from 4% to 6% in last 1 year. So the margins will remain thin, but again, the outlook would be very much positive. They have good design and manufacturing facilities that gives them some kind of very back-end support for supply, as well as they have started their own online sales, which is also additional revenue they want to capture in the going market, in the online markets. But again, valuations currently trading at 45 P, price to book value 14. So this is not comforting me to recommend Tanya to add more at this point of time. Obviously, she has added already 300 shares, but any dip below 300 rupees would be an opportunity to add more with a long-term 2 to 3 years. I like the model, but not the valuation at this point of time.
Okay, lovely. So you like the model, but not the valuation at this point of time. And Tanya, I hope you've gotten your advice. And viewers, just a little diversion to give you an update. And we're just hearing that according to some, the government has currently imposed 12% safeguard duty on some steel imports for 200 days. Now, remember, steel as a space has been in focus, especially given the uncertain global environment that we're currently in. There's a lot of fear around Trump's tariffs and how Indian steel exporters could be affected by dumping from many other countries, neighboring countries, and therefore with the kind of exposure that we have in the steel market, government coming out and listening to the steel steel space. In fact, players in the steel and metal space had been demanding the government to come up with some kind of safeguard duty to protect the industry. And now that the government has come out and has imposed 12% safeguard duty for 200 days, I'm sure is a breather for many important players in this space. Let's go across to Prithvi Raj, another caller. He is calling us from Andhra Pradesh. Hi, Prithvi Raj. Good evening.
Hi, good evening.
Please ask your question.
My query is about Ramkrishna Forgings Limited.
Okay.
Actually, I purchased 10 shares in today at 721 rupees.
Okay.
And I want to accumulate more. So I want the fundamental analysis on it. So my view is long term. I want to hold it for 5 years.
Okay. And how many shares did you say again, Prithvi Raj?
I bought 10 shares today, but I want to accumulate more. Is it a good time to buy now or buy on dips is the suggestion?
Got it. Rajesh, let's get your technical expertise on Ramkrishna Forgings for Prithvi Raj. He wants to know, he currently holds 10 shares, he bought them today. He wants to know whether this is the right time to buy more units of Ramkrishna Forgings. Could you give us a target price, please?
Overall, this is a very volatile counter, and generally we see a very sharp move in this space. Today also it was down more than 2%. As of now, the short-term trend remains negative, and the next key support would be somewhere around 630 to 640. So as of now, fresh longs could be avoided. But if it dips further towards 630, 640, then that is a multi-year support levels. So that can be levels to be watch out for.
Okay, and Prashant, what would your fundamental advice on this company be? Because it's primarily engaged in the manufacturing and sale of forged components of automobiles. How do you think the space is positioned currently?
Companies which have clients like automobile industry would be under concern right now with respect to the tariff war and the export concerns. Visibility is very less at this point of time. Again, Q4 earnings, I would like to advise the client, the caller to have a wait and watch strategy. Again, I think Q4 earnings will not so be good. So I think there can be a good sharp downside expected towards 650, 620, at least 10% from the current levels. That would be a level where he can add some shares at this point of time, not fully invest in the at this point of time, but again at least 20-30% of his planned investment can be added once Q4 earnings comes out. That would be a level to start investing in this company. Obviously, long term looks neutral to positive, but at this point short term will be some kind of blurry with respect to the earnings growth.
Understood. And with that, we are joined by a caller from Bengaluru. Hi, Mahadev. Good evening. Mahadev, am I audible? I think we've lost the line there, but we have Mahadev's query with us. He holds 100 shares of Pix Transmissions at 400 rupees, and he's looking for a long-term view on it, and he is sitting on a profit of over 1 lakh rupees there, because currently it's trading at 1553. So Pix Transmission, for our viewers, is a leading manufacturer of belts and related mechanical power transmission products in India. So Prashant, coming to you and talking about the fundamentals of this company, the current PE ratio stands at 18.5. So do you see that in the near future also it's going to yield good results?
I think with respect to the business model, very good, very decent growth can be expected from the company as well from the industry. But if you see Q3 earnings, there was some kind of pressure in the EBITDA margin. It has already come down from 32% to 24%. It's a matter of concern again. So for this company, I would like to advise the client to wait and watch for a Q4 earnings. If there is some kind of EBITDA stability at 24% or some kind of incremental EBITDA of 30% at least, so then things will be working very good. Let the stock rally at least 50-100 rupees from the current levels, where we can see some kind of strength based on the earnings show. So then there will be some kind of visibility for next financial year. Then only fundamentally things as well as the valuations give me some kind of comfort to go buy long.
Good. And Rajesh, coming to you on the technical front, are these the correct levels for a new investor to enter? And also for our viewers, I mentioned PE ratio earlier, so just to tell us who don't know what exactly PE ratio is. So it's basically price to earnings ratio of share price to stock of its earning per share. So with that, Rajesh, coming to you, what are the charts suggesting on Pix Transmissions?
First of all, congratulations to the viewer to bat a very good levels and holding on to it. And in the near term, we are seeing that the stock is trading in a range, and the immediate hurdle that we are seeing is 1780. That is a 200 DMA. The March rally got sold into when it tested the 200 DMA. So 1780 is a very stiff resistance. And on the downside, if we see the stock has a strong base somewhere around 1400. So 1400 to 1800 is the immediate range that we see for the Pix Trans.
Okay, got it. And now we have Anju joining us on the phone line from Pune. Hi Anju, good evening.
Hi, good evening.
How can we help you?
So I'm holding 5,000 shares of Suzlon at a rate of around 74 rupees. Been around 8 months or so. Just wanted to know what is the outlook and what are the fundamentals of the company.
Understood. Let's go across to Prashant on this one. Prashant, Anju currently holds 5,000 shares of Suzlon Energy at 74 rupees a piece. She bought them a couple of months back. Although it has not yielded any profits to Anju, how do you see the company performing not only just on the exchanges but fundamentally as well? In fact, it has, it has in fact, reacted to the government's announcement in favor of the company as well to sort of manufacture some local components for wind turbines domestically. How do you see Suzlon Energy participating in the broader renewable energies theme of India?
So it's almost the global, one of the largest renewable energy company manufacturer. So for me, a long-term investment, obviously there is a lot of still cream left out in the price action. But in terms of again a revenue model, very strong at this point of time. If you see even the Q4 earnings, there was a good strong 300 basis point improvement in the Q3 earnings that gives some kind of very confident for an investor or analyst to be very positive on the stock. For me, again, the cost of investment of 75 can be expected very soon in a quarter or so in the Suzlon. Obviously, then it's a good opportunity at 60 rupees to accumulate more the same business model which she has invested at 75. So opportunity to average out at this point of time so that the price would come down in terms of average. And then my overall target would be for next 1 year would be 80 to 85 rupees from the current levels. So she will be in good profits from the 12 months from the current period. Overall, very positive. Valuations are a bit expensive right now, but obviously the stock has a good growth expected from next 3 to 4 quarters. So valuation will remain in the similar price.
Understood. With that, let's go across to a caller joining us from Mohali. Hi, Harjeet. Good evening.
Good evening, ma'am.
Yes.
My query is regarding
Harjeet, I'm afraid that you're not audible. There's some glitch in the line. Yes. Please go ahead with your query now. Yes. Yeah, it's better. Please go ahead.
Ma'am, I bought 30 shares of ABB at rate 5570.
Okay.
And currently it's at 5629. I'm thinking of holding it for 1 year. Is it worth accumulating at this level?
Okay. So how much are you planning to buy more at these levels?
My finances for about 40 shares.
Understood. Okay. So in total 40 or 30 plus 40? That equals to 70 shares in total.
10. 30 plus 10.
30
so
plus
can
10.
I buy another lot of 10? Yeah.
Understood. So Prashant, currently, rightly said, it's currently trading at 5,629 and was also up in trade today. But, talking about the current challenges that are there, in the international markets, do you see ABB India, coming out as a winner in the next 1 to 2 years? Are you positive on this company?
Obviously, yes, with a view of 2 years, there's a lot of opportunity for the company to perform. But again, near-term hurdle will keep the stock under pressure. Maybe 5,500 or 6,000 can be a range, coming for 1 or 2 quarters. But I would like to focus more on the valuations again with the ROC of 38%, ROE of 28%, very strong, a company to perform well in these markets as well. But price to book valuation, again, very expensive at this point of time, very much like 16 times from the current level. That is some kind of concern for me. But if you see all the Q3 earnings and Q4 earnings, that is also doing very much better So that is giving me some kind of comfort levels to advise the client to hold the stock and even average more at this point of time. 5,000 to 5,500 can be a good range. I think by Q4 earnings, there can be some kind of volatility and there can be some kind of profit booking attempt seen in the stock. Then the stock can come down to at least 200, 300 rupees from the current levels. That would be a good level for him to add more, but long term, very positive. The average cost of 8,000 can be expected next 1 year.
Okay, and now we have Harshvika calling us from Bengaluru. Hi, Harshvika.
Hello, ma'am. Good evening.
Good evening. Please tell us.
I hold KEI shares at the price of 2,837.
Okay.
80 shares.
Okay.
Can I add more for current level?
When did you purchase these shares, Harshvika?
5 days back, ma'am.
Okay. And how many more do you want to add?
More than 80 to 90, ma'am.
Okay, okay, got it. Rajesh, I'll come to you on this one. Harshvika currently holds 80 shares of KEI Industries at 2,837 rupees a piece. The stock is trading around 2,896. Its 52-week high was about 5,000 bucks. She wants to add 80 to 90 more shares to her portfolio. When do you think would be the right time to execute that?
So on the monthly chart, we are seeing that the stock is forming a hammer pattern. So that is a very strong formation. So we are expecting the stock to rebound back towards 3480 to 3500 in the near term. So possibly in the range somewhere around 2700 to 2750 would be an ideal level to enter. So overall, the charts look positive. So any dip towards 2700 can be taken as a buying opportunity.
Understood. Now let's go across to a caller joining us from Bengaluru. Hi, Chetan. Good evening.
Hi, ma'am. Good evening, ma'am.
Yes. Please go ahead with the query.
Motilal Oswal shares of 400 quantity. Our average price 675. February month buy, ma'am.
Okay.
Profit 4,000 profit, ma'am. Book or world, ma'am.
Understood. And are you a short-term investor, Chetan, or a long-term investor?
Ma'am, short term 9 months, ma'am.
9 months. Understood. So, Rajesh, I'll come straight to you. Currently, it's trading at 685 and was also up in trade today over 4%. And, you know, if I look at the charts, so since 8th of April, the stock is in an upward trend. So, do you see this trend going forward and are you positive on the counter? What are the charts suggesting?
Yes, we are positive. Motilal Oswal possibly headed towards 750. We highlighted CDSL before that the capital market segment is looking positive. Similarly, Motilal is looking positive, possibly towards 750, 770. So can hold on to it. Somewhere around 620 is a strong base. And on the higher side, as I said, 750, 770 looks immediate upside.
Okay, got it. And now let's talk to Rani, who's calling us from Chennai. Hi, Rani. Good evening.
Good evening. I'm holding PVSL, Popular Automobiles.
Okay.
I bought it at the IPO time for around 295.
Okay.
And since then, in 1 year, it has reduced a lot. I kept averaging down. Now I'm holding 630 shares at 260 rupees, but I'm still at a 65% loss. So I wanted to know what to do. Is it a good long-term company? Should I keep averaging down?
Okay, and could you help me with when exactly was this IPO time for this particular company?
I think March 2024.
Okay.
It's been more than a year.
More than a year. Understood. Okay.
I kept dipping. So I averaged a lot, but it's still at a 60% loss. And the city is quite high. So I wanted to know, should I just leave it for now or should I average or is it a good long-term hold?
Right. I understand the query. Prashant, I'll take this question to you. Rani had purchased and in fact has been purchasing shares of Popular Vehicles and Services and now has a total of 640 shares of this company at an average price of 262 rupees. If you look at the stock price at the moment, it is trading around 97 rupees. So she has experienced a significant fall from the time of purchase. What would you suggest Rani to do, because it has only fallen? There has been no sign of upward momentum since it listed on the exchanges. What's the future of the company?
one should understand the sector first again. Automobile industry, if you see last 6 months, the main companies like Tata Motors, Maruti or Mahindra, they are already facing a lot of pressure in terms of maintaining a margin and even getting a sales growth. So when these popular biggest brands in India are facing some kind of pressure, so popular vehicle will also have some kind of similar pressure. Again, it's into second hand as well as resale of the cars in Indian market. But overall, margins are very much thin. Improvement in the margin is very difficult in this current market until unless the industry grows faster and Tata Motors, Maruti and M&M, they start making some kind of incremental EBITDA margins from the current levels. Then I think popular vehicles will see some kind of positive action. Despite this, again, in terms of valuation, again, not so comfortable. In terms of ratios, and so not so comfortable. Price to book value valuation is somewhat comfortable. Again, it's trading at 1x of the book value. But if you see last 6 to 8 months, the company has started underperforming. Even when markets were at all-time high, even that point of time, popular vehicle did not perform well. So my advice would be, if the loss is bearable, exit the stock. And if you want to have an automobile stock, I think one should focus more on Mahindra & Mahindra as well as Tata Motors.
Okay, so you said that if the loss is bearable, then she should perhaps exit and invest in another attractive stock. But is that your sound advice to Rani? Because of course you've also seen that the stock has not performed in sync with how the market has moved. So should Rani confirmly exit is the kind of advice I'm seeking from you.
Yes, again, with respect to fundamentals, I am not seeking any positive momentum in the earnings as well. So a 3 to 2% of EBITDA margins is very difficult to sustain in this current market. When I said you Tata Motors, Maruti and Mahindra is facing so much of pressure in their business model right now. So this company will obviously have some kind of extra pressure to perform. So overall exit would be a straight away option. Recovering the cost would be very difficult for her for a very long term again. So I think it can even come down to 80, 85 from the current levels if Q4 earnings are bad when it compared to Q3 earnings. So better to get that money from the market and then invest in stocks like Tata Motors or Maruti if she wants to be in automobile industry only.
Understood. Now with that, let's go across to a caller joining us from Bengaluru. Hi Krishnan, good evening.
So I just want to ask about HDFC Bank. Finally, okay. We started moving now. I have 88 shares I purchased for 1.98.
Understood.
So currently I have a profit of around 29,000. So I want to buy some more shares. Okay, another 200 shares I want to buy at this price. So whether it will be further going up from current level.
Understood. Because currently, from the levels that you had bought, it's already up. You bought it at 1,598. Currently, it's trading at 1,927. And the banking space has been performing well and was also up in trade today, over 1%. So Prashant, talking about the fundamentals aspect, the Q4 results review also, analysts were positive, and the net profit increased by 6.7%, and net interest also increased over 10%. So what's your outlook on HDFC Bank and the banking space per se? Because we've spoken about the banking space earlier, but if we talk about HDFC Bank, what's your outlook?
In terms of long term, again, the high focus of business is into retail as well as housing sector. Housing as a sector, I'm very much positive for at least 2 to 3 years, and obviously 32-33% of the housing growth in India comes from HDFC Bank, and second would be from the SBI Bank. So that would be one reason why I would be very positive on this stock with a target of at least 2100 to 2150 for at least from current level for 12 months from the current levels. But again, there can be some kind of profit booking attempt also, because it's the stock has performed very well in the recent times again, plus it's a part of index again. So if there is some kind of profit booking in the index level as well as in the profit, the stock may come down towards 1880 again. So he needs to maintain the stop loss and then hold it for at least 2100 from the current levels.
Okay, got it. Now let's talk to Ravish. He is on the phone line from Bengaluru. Hi Ravish, good evening.
Hey, hi. I have a query regarding Rallis. I hold 3,500 shares of Rallis at 267 rupees.
Okay.
I'd like to know whether I can hold or I can average out at this.
Okay. Just a couple of questions, Ravish. When did you purchase these 3,500 shares?
Just a few months back, probably 6 months back.
6 months back. And did you buy them collectively or did you aggregate?
I've already averaged out.
Averaged out, okay.
Yeah.
Okay. Rajesh, let's talk about Rallis India. The stock is now trading around 237 rupees a piece, and Ravish had bought them for 267 rupees 6 months back. He currently holds 3,500 shares. What is your long-term outlook on Rallis India from a technical standpoint?
So if we see the long-term charts, the stock has bounced from a key support during 2023. The stock had rallied from the levels of 200 to towards 350. So currently placed at strong support, and in the last couple of weeks we have seen some positive traction and a double bottom breakout. So possibly, yes, short term looks positive, possibly headed towards 275 to 280. So definitely can hold on to it. Stop loss, if wants to give, will be somewhere around 210 levels.
Okay, so 210 being a stop loss for Rallis India. But with that, Rajesh and Prashant, thank you so much. We have run out of time on this show, but we will see you back again, and we thank your patience. And viewers, you stay tuned to NDTV Profit, and do remember to send in your queries on the WhatsApp numbers available. We're here to answer all your stock related queries and give you the best investment advice. Stay tuned. There's a lot more lined up for you right on the other side.
To India specifically, I really think India has a fascinating opportunity, because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
The first stock on the list is it's IGL now. If you see the stock that has perked up around 4% in trade, and this is largely on the back of the buzz that is on the street, that the company might announce a price hike of anywhere between 3 to 4 rupees from the 1st of April. Now this might as well happen in phases, so keep an eye out for IGL. Now this stock had to, the company had, in fact had to take a price hike post the Delhi election, because the cost of gas had increased for them, and because of that the margins had come down, but they had not taken any price hike so far. So the street is expecting a price hike announcement to come in, which will be effective from the 1st of April, and it could be around 3 to 4 rupees, and it could well be implemented in phases. So keep an eye out for IGL.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters?
Markets in India shine as the Nifty surges past 24,100 while the Sensex closes above 79,400. In contrast, US markets saw declines with the S&P 500 down, Nasdaq 100 slipping, Dow Jones Industrial Average also shedding. Across Europe, there's a mixed sentiment that persists with major indices trading cautiously. US Vice President J.D. Vance begins a 4-day visit to India and America as both countries seek to unlock economic opportunities and negotiate a bilateral trade deal. However, tension remains with sources saying the US is pushing for zero tariffs, a concept that India is reportedly not in favor of. India imposes a temporary tariff on 12% of steel imports to try and curb a surge in cheap imports from China and elsewhere. Maharashtra's Joint Transport Commissioner tells RTOs to shut Ola electric stores operating without a trade certificate. Pope Francis, the religious head of 1.4 billion Catholics across the world, has died. He was 88 and he suffered from various age-related ailments and was hospitalized for over a month. Good evening, you're watching Profit 360 on NDTV Profit. I'm Sanjana. For the next half an hour, we're going to take you through the latest in markets as well as national and international news. So let's start off with a global market check. Back in India, markets shone as the Nifty surged past 24,100. The Sensex closed above 79,400, with broader markets outperforming benchmarks for the 5th consecutive session, while the Nifty Bank Index crossed 55,000. In contrast, we see US markets declining with the S&P 500 down 1%, Nasdaq 100 slipping 1.3% and the Dow Jones Industrial Average shedding 0.7%. Now, stocks in America is falling as President Donald Trump has ramped up his attack on Federal Reserve Chair Jerome Powell, raising questions about the central bank's independence while traders received little signs of progress on global trade talks. Let's shift focus to what's happening in Europe. We're seeing mixed sentiment that's persisting with major indices treading cautiously. Meanwhile, what's happening in the national capital? US Vice President J.D. Vance has embarked on a pivotal 4-day visit to India, aiming to strengthen bilateral ties by unlocking economic opportunities and negotiating a potential trade deal. His discussions with Prime Minister Narendra Modi are likely to center around critical themes such as the economy, trade policies and geopolitical alliances amidst the backdrop of an escalating trade war between Washington and Beijing, India's main rival in the region. Now, my colleague Rishabh joining us on the phone line with more. Rishabh, this visit is seen as a significant diplomatic effort by Donald Trump's administration, especially as India explores the possibility of reducing its average tariff line across all items to 10%, down from the current 13.5%, to facilitate smoother trade relations. However, understandably, and we can see that this is something that has been pushing from much before, the US also very insistent on zero tariffs.
Right, Sanjana, what we're seeing, of course, the elephant in the room is, of course, the global trade and tariff war that is occurring, and whenever leaders of the world's largest two democracies meet, that has to be on top of the agenda. So that is what we're seeing. Both countries have opted and hoped for an early harvest, the first tranche of the proposed bilateral trade agreement to be done and dusted by fall this year, so September or October this year. And both nations are now sort of rushing to get it done actually before and preferably in this 90-day tariff pause period that we're seeing. Apart from the BTA, we'll see that the talks will probably revolve around defense, space cooperation, as well as the energy transition that is underway across the world. What we're seeing is that immigration issues could also be on the cards. But of course, the most interesting would be, and the most important would be the tariff rationalization exercise that is underway both across the U.S. market as well as India. We're also seeing that Indian negotiators are set to travel to the US for trade talks. So JD Vance's visit as important as ever.
Seem to have lost the phone line there with my colleague Rishabh Bhatnagar, but we'll try and get him in just a moment. But let me quickly take you through what exactly Rishabh was trying to explain to us. We're seeing JD Vance's first visit to India as Vice President of the United States becoming imperative to understand why his visit is important for us while we are trying to our best to lock a mutually beneficial trade deal. My colleague Rishabh back with us on the phone line. Rishabh, over to you for more.
Right. Yeah, what I was saying was that we're also seeing that Indian negotiators are set to travel to the US this week. I think on Wednesday or Thursday is when the Commerce Secretary designate Rajesh Agarwal is expected to lead a delegation to the US for further trade talks. So JD Vance's visit as important as ever in this changing global trade environment. Back to you.
Right, Rishabh, thank you so much for that perspective. We'll continue tracking the story. This is, remember, as JD Vance is at this point of time meeting with Prime Minister Narendra Modi at his residence. There is a dinner actually, taking place as we speak. We're going to try and give you visuals and stills of that in just a moment. But before that, let me quickly take you through JD Vance's first visit to India, why it is imperative, and while we are truly trying our best to lock a mutually beneficial trade deal with America, I'm going to bring you a simple yet profound view of the importance of this visit, especially during a highly uncertain time. Let me quickly go across to my colleague Malika for more on this. Malika, over to you.
Vance's visit comes as hopes are running high in New Delhi that the country can secure a quick deal and a reprieve from weightier levies while a 10% baseline tariff is in place. This high-level visit marks a pivotal moment for US-India ties, economically, strategically, and even symbolically. Let's take you through the how and why. Point number one. New Delhi is expecting to clinch a trade deal with the US within the 90-day pause on tariff hikes announced by Trump on April 9th for major trading partners, including India. Modi and Vance are expected to review progress made on the bilateral agenda outlined in February when the Indian leader met President Donald Trump in Washington. Point number two. India is a close partner of the US for bilateral trade, foreign direct investments, defense cooperation, and an important strategic ally in combating the rising influence of China in the Indo-Pacific region. It is also a part of the Quad, which is made up of the United States, India, Japan, and Australia, and is seen as a counterbalance to China's expansion in the region. Point number three. Vance's meeting with PM Modi and top officials signaled continuity and possibly set the stage for a Trump visit later. Modi established a good working relationship with Trump during his first term in office. India has also already taken a number of steps to win over Trump. It will purchase more oil, energy, and defense equipment, including the 5th-generation fighter jets from the US. Point number four. Usha Vance's Indian heritage brings a personal touch, reinforcing people-to-people ties between the two nations. And point number five. Lastly, with India rising in tech and manufacturing, the US sees it as a vital partner in a shifting global order. Trade strategy, symbolism, the Vance visit reflects India's growing weight in America's global playbook.
Thanks, Malika, for that perspective. And joining us from London this evening, I have Professor Lucas. Thank you so much for your time, sir, and thank you so much for actually giving us insight. He is a professor of US and international politics. I don't think he can hear us at the moment, but before that, we'll just quickly try and get an insight from him, and we seem to have lost the connection. But before that, let me quickly play out for you now some visuals coming in of this very crucial meeting taking place between the Prime Minister and Vice President JD Vance. What you can see on your screens are the latest shots that are coming in from JD Vance's 4-day visit to India. This is in the national capital. JD Vance being accompanied, as we just spoke, by his wife and his 2 children. Now let me once again quickly go back to our guest joining us this evening, Professor Scott Lucas. Professor of US and International Politics at the Clinton Institute of University College Dublin. Thank you so much for joining us from London this evening. Professor Lucas, let me quickly cut to the chase. How do you actually see Vice President J.D. Vance's visit shaping the trajectory of India-US relations in the context of the ongoing tariff war with China?
Let me be very honest with you and your viewers. This, in effect, is like, if we call the Trump administration kind of an organized family, kind of an organized business family, this is like someone coming and saying, we'll offer you protection, but we want you to pay us some money. In other words, what the Trump administration is trying to do initially by slapping on that 26% tariff on India at the start of April, then in this period where it's been reduced to 10% for 90 days, is to say, all right, give us reduced tariffs on US products, give us reduced tariffs on, for example, our agricultural products, despite the objections from India's farmers. Indeed, as you were showing your viewers, give us a 0-for-0 deal on tariffs. Now, there are reasons why India has maintained a tariff rate of about 11 to 12% on average on US products. And the Trump guys are saying, look, we want you to strip all of that away. It's easy to say that it can be done with a trade deal, and both sides are saying trade deal. It is much tougher to get to a trade deal in practice.
So how significant is the US administration's push for 0-for-0 tariffs that you were just talking about in the broader context of global trade negotiations, and why might India resist this?
Yeah, what's significant is that it's not part of an organized Trump strategy across the board. So, for example, the European Union offered the Trump administration 0-for-0 months ago. And the Trump administration simply said, no, we don't want that. And that's because the Trump administration actually, their so-called tariffs are economic nonsense. That magic chart that Donald Trump held up, all those numbers didn't actually correspond to reality. So you have to look at it more as the US going to each individual country and seeing what it can sort of shake out of them in terms of concessions. Now, of course, India is going to be looking not only at the United States, but they're going to be looking at this US-China tariff war, with the US now at 145% tariff on Chinese products. And India is thinking, can we protect ourselves from that, not only by reaching a deal with the United States, but hoping that our supply chains aren't disrupted.
Professor Lucas, thank you so much for your time. Your expertise clearly shedding light on these key developments that help us better understand this evolving global landscape. Thank you so much for your time and your perspective.
And thank you and your viewers.
And let's take a look at how markets fared in India today. Benchmark indices opened the week with stellar gains, making it the 5th consecutive session of higher returns. Now, the broader markets outperformed benchmark indices, signaling a bullish sentiment. But the only sector lagging was FMCG, possibly due to profit booking or sector-specific headwinds, while all other sectors participated in the rally. Let me quickly go over to my colleague Harsh now, who will give us the roundup of what happened in the markets today.
Well, interesting day in markets. You know, we've gained now for a 5th straight trading session, at least on the Nifty. We closed nearly 1.5% higher on the Nifty 50, and you know, led by banks, but huge contributions from the IT stocks as well in trade today. Surprisingly, given the kind of tepid numbers that Infi came out with, but nonetheless, IT is surely taking the lead in trade outside of the banking pack today. The Nifty Bank, in fact, clocked an all-time high, breached its all-time high, and therefore clocked a new high in trade today. And some of the heavyweights really chipping in before cooling off as the day went by. So the banking stocks as well as IT stocks were clearly in focus. Outside of that, metals and auto also did very, very well. They chipped in well, 2% plus on both metals as well as auto. You had an M&M, a Bajaj Auto, some stocks which are really doing well in trade. So some names to look out for. What didn't do well was some FMCG names, and Nestle and HUL. Some of those stocks were the laggards of the day, and Nifty FMCG also only sectoral index to close in the red. In terms of the breadth of the market was also quite strong. You saw nearly 500 losers, that's about it, versus the 1700 gainers that we saw. So favorable breadth led by a good performance by both small and mid-cap indices. Both closed at or near the day's high. The mid-cap index was up 2.25%, the small-cap index also up 2% plus, and both of those did fairly well for themselves. The breadth of the market was also strong. Lastly, some names which were really flying in trade, especially on the back of an earnings, was something like a Just Dial, a Tata Elxsi from within the broader market pack. You saw some real buzzers in trade. But outside of that, it was a fairly good day because not too many large losers that we saw. And Avanti Feeds was down 5%. But outside of that, within the BSE 500 basket, not too many down by 3% plus. And therefore, a good day of trade overall.
Thanks, Harsh, for that. But we're getting a quick update coming in. The government has now imposed a 12% safeguard duty on specific steel imports following a probe by the Directorate General of Trade Remedies. This move, applicable for 200 days, targets imports from developed economies like China and Vietnam. Now, the DGTR initiated the investigation after the Indian Steel Association flagged concerns over a sudden, sharp and significant increase in imports, which they claimed was causing injury to the domestic industry. This duty is designed to shield Indian manufacturers from the surge in cheap imports, ensuring a level playing field and bolstering the domestic steel sector amidst all of this competitive pressure. My colleague Rishabh now joining me with more details on this. Rishabh, let me quickly come to you right now. If you could give us all of the details on what the government is doing to actually shield this sector domestically.
Right, Sanjana, what we're seeing is that after a very long probe and rather a very long wait for this by the Steel Association for these safeguard duties of about, I think, 4 months, we've finally seen that the government has imposed a 12% safeguard duty. Now, this safeguard duty is applicable for about 200 days from today. And this covers developed economies as well as China and Vietnam, which is where the bulk of these imports are expected to come in from. Remember, given this trade and tariff war, India has had to engage in a lot of ring fencing of the borders with respect to dumping concerns across sectors such as pharma, such as textiles, and now and steel, as we see now. What we're seeing also is that the industry had actually demanded for somewhere between 18 and 25%. The industry would have hoped for a much higher safeguard duty and one that was not temporary. But what we've seen from the government now is that a 12% duty has come in. This might be reviewed in the future, but perhaps after 200 days or before that. But we'll continue to track the situation given how delicate the current trade situation is.
Right, Rishabh, thank you so much for bringing us those updates as India moves to shield the domestic steel industry. Moving on, the Reserve Bank of India has unveiled its eased liquidity framework, offering banks more time and flexibility in compliance while aligning new liquidity coverage ratio norms with global standards effective April 2026. What all things are included in the amendment? My colleague Subhana now joining us with more details on the same. Subhana, could you walk us through the key amendments in the RBI's revised liquidity framework and explain how these changes align with global standards while also impacting the banking sector's compliance landscape?
Sure. So the revised norms will actually allow banks to keep aside funds against, retail deposits at 2.5%. Now, the revised, the previous guidelines, the draft guidelines which had come in last year in July 2024, the RBI had proposed a 5% additional runoff factor. So this is half of that. So this is definitely a breather for banks, which had come out and said that their net interest margins would be impacted. Now, another thing is that the earlier draft guidelines had proposed, differentiating between stable and less stable deposits, but the final guidelines are suggesting a flatter structure. And RBI has also given, like you rightly said, enough time, for banks to comply with these norms. The RBI is saying that, banks can actually comply with these norms by April 1st, 2026. And this is based on the data that banks have submitted to the RBI as on December 31st, 2024. So what the RBI is saying is that based on the data that banks have submitted to the RBI, these measures will actually improve LCR, which is the liquidity coverage ratio of banks, by 6%. So that's another breather for banks, because back then when the draft guidelines had come in, there was a lot of ambiguity. So now that ambiguity is gone, because the central bank has, in coordination with banks, come out with these guidelines. So this is largely what the RBI has said.
Right, Shubhana, thank you so much for bringing us those updates. We'll continue tracking the story and bring you all of the latest developments. Moving on to an NDTV Profit exclusive now, Ola Electric finds itself in more hot water as Maharashtra's Joint Transport Commissioner has ordered RTOs to close Ola Electric stores operating without a trade certificate. Over to my colleague Tushar for the full story.
On 16th April, Maharashtra's Joint Transport Commissioner shot off an email which was actually show cause notice to RTOs in the state to actually shut down those Ola Electric stores that still do not have trade certificates. According to that email, about 131 Ola Electric stores have been inspected, out of which 104 were found to be without a trade certificate. About 43 of them have already been shut down. The rest 64 have to be shut down on 1 day's notice. A total of 214 Ola Electric stores have been seized so far from 131 Ola Electric stores. In response to this particular story, Ola Electric said that our claims regarding the stores in Maharashtra are speculative, incorrect and misplaced. We continue to work closely with concerned authorities in Maharashtra to address any specific queries of the government. Now, we have to remember that this is actually a result of the operations or the inspections that the Maharashtra government has been carried out on Ola Electric stores. It was initially found that several of these Ola Electric stores were operating without trade certificates or sharing one amongst them. Ola Electric actually earlier this month it said that it's now in the process of applying for all these trade certificates and will comply with the norms that the state government has or the state RTOs have. But Ola Electric has continued with the raids. Transport Minister Pratap Sarnaik had earlier told NDTV Profit that about 300 to 350 Ola Electric stores in the state were found to be operating without trade certificates. It's still an evolving story. We'll continue to bring you the latest on this front.
Thanks, Tushar, for that. And let me quickly hand it over to my colleague Himangshi now, who will delve into the timeline of Ola Electric and shed light on the key moments when it came under scrutiny. Himangshi, over to you.
The heat on Ola Electric began when government started raiding Ola Electric stores in Mumbai, Pune, Jabalpur and Indore. Now, after these raids, the Maharashtra government tightened its noose and trouble started to mount for the company. Now, let me just take you through the timeline of the Maharashtra government's action against Ola Electric. In the month of March, several Ola Electric stores were found operating without trade certificates, and some even shared one certificate across locations. Then on April 4, Maharashtra government issued a notice to Ola Electric demanding answers on the missing trade certificates. Now, this takes us to April 5, where the State Transport Minister Pratap Sarnaik tells NDTV Profit that 300 to 350 Ola stores had been raided. And on April 9, Ola Electric responded by saying that it's in the process of applying for the required trade certificates. And this brings us to April 16th, where a fresh directive from Maharashtra's Joint Transport Commissioner was given to all the RTOs for shutting down all Ola stores operating without valid trade certificates. Now, as a result of this, 43 out of 107 stores are already shut. The rest 64 stores face closure with just 1 day's notice. Now, 214 scooters have been seized from 131 inspected stores. Ola, on the other hand, is calling the claims speculative, incorrect and misplaced. So the standoff continues for now as Maharashtra is holding Ola Electric to the rule book.
Thanks, Himangshi, for that. Moving on, Google has agreed to a 20 crore settlement in a major antitrust case concerning its dominance in the Android TV market. The Competition Commission of India has approved the deal, ending an investigation into this tech giant's practices. Let me quickly go across to my colleague Charu for more on this. Charu, how significant is this settlement, and if you could just give us a brief background on the same?
Right. So let's understand what the major problem was. Google had agreements in place which were stopping manufacturers from using or even, sort of developing any other version of Android operating system. So this system was known as Android Fork. Now these agreements were, making it difficult for any competitors to enter the market or for the manufacturers to, get creative or innovate freely any other system to use as well. So the competition regulators, the CCI, found that Google's conduct blocked market access, restricted competition, and forced manufacturers into accepting unfair terms. It was basically seen that these were the allegations that were being made. However, a case proving these allegations completely or, substantiating these claims was not made out, and that is why an agreement to settle was passed. And however, the pecuniary limit is not very high, but it holds significance as to what extent an unfair practice has to be implemented for it to be considered, completely in violation of the laws that are currently applicable.
Charu, thank you so much for that. Google's antitrust heat finally cooling down as the Android TV case is settled. Moving on, a towering figure in the Catholic Church and the first ever Latin American pontiff, Pope Francis, has passed away at the age of 88. The Vatican confirmed his death early Monday morning. He was known for his humility, reformist zeal, and deep concern for the poor and marginalized. His recent health struggles, including double pneumonia and kidney complications, had left him in a critical condition in recent weeks. He will be remembered not just as a spiritual leader, but also for his progressive stance, including his outreach to the LGBTQ+ community. My colleague Vishal now joining us with more on Pope Francis's legacy and his inclusive vision for the church.
As far as the impact of Pope Francis is concerned, it's safe to say that he has been one of the most revolutionary popes ever. The fact that he had such an inclusive stance when it comes to topics such as homosexuality and gay rights, he had been openly heard talking about these issues and even promoting inclusivity to the point that he also went on to say once that homosexuality needs to be decriminalized in a lot of countries, and LGBTQI plus folks need to be included into civil discussions. Quote unquote, they are children of God. There's no difference between a homosexual person and a straight person. So he had these strong views on these matters. The overall view of Vatican hasn't changed. It is still the same when it comes to topics such as homosexuality, but he himself, Pope Francis, had repeatedly spoken about these topics with passion and told that everyone under the sun is same as far as the God is concerned.
And that's a wrap on Profit 360. Stay tuned to NDTV Profit for more news and updates.
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
The first stock on the list is it's IGL now. If you see the stock that has perked up around 4% in trade, and this is largely on the back of the buzz that is on the street.
Hello and welcome. You're watching KYC, Know Your Company. Today we're going to be talking about NTPC, and just to kind of list down a few reasons as to why we are talking about NTPC today. First off, is we're going to try and assess whether this is a pocket of safety in this time of uncertainties, and there are plenty of them, at least at a global stage, and even more so domestically. Growth seems to be coming off in that sense, and it's a roll-on impact of everything that's happening globally. So is this that pocket which is domestic facing and looking better in relative terms? So that's point number one. Point number two, valuation. Is the risk reward fair at this point? So the opportunity size may be so, but is the risk reward therefore fair from an investor perspective? So this is the first reason why NTPC. The second one is valuation. Is risk reward fair at this point? Because it's not trading at its typical valuations or long-term averages. Can NTPC deploy fresh capital at high return ratios? This is my third question, and which I'd like to have answered. The fourth one is opportunity. Whether it is so opportunity is large is absolutely fair. Whether NTPC is well placed to capture that opportunity, or whether there are other players in a better space to capture the incremental market share coming out of the opportunity size. The fifth one is what are the risks like, including the risk of execution. Because if execution does not happen, Mihika, you might likely not see the kind of outperformance that we've seen over the last 5 years from the NTPC stock. So those are the 5 key factors that I'll watch out for where NTPC is concerned. Welcome, Mihika, by the way. And let's quickly start off. With what NTPC does. Well, it's the largest power generator in India. It has the largest capacity for thermal power in India as well. It operates 92 power stations and has a huge capacity. 76 gigawatts is the total capacity that NTPC has. It's 17% of India's installed capacity, 25% of India's utilized capacity for FY24. So extremely large, and it's a very, very important company in that sense. If NTPC stops producing power, you'd likely see
a big demand supply gap.
6 hours of our air conditioner not functioning, and likely being that the country will come to a standstill. So something to keep in mind. The second one is with regard to how, so it's 82% coal-based capacity that it currently operates, 18% renewables. This may shift, and we'll talk about this shift as well as it starts to happen and as it starts to unfold. We'll talk about how we're expecting that to happen. They have 17.6 gigawatts of thermal capacity under construction. Mind you, a lot of this has started to come on stream because of the large power demand and the deficit that we are playing at, and expected to add 5.5 gigawatts of thermal capacity over FY25 to 27 as well. So that's something to look out for on the thermal side of things. But ESG, Mika, everyone wants to go green. So does NTPC. They're going into renewables. They're going into. They already do hydro in a big way, but they also want to go nuclear. So talk to us about that.
So it's their focus on thermal is going to stay, because as we know that we're going to need that round the clock energy as we transition to renewables. But the priority for future growth is renewables. They're targeting 60 gigawatts of renewable capacity by 2032. This compares to 3.5 gigawatts on a consolidated group level as of FY24. Majority of this capacity will be built and deployed separately by NTPC Green, which is also its listed subsidiary, and they have 10.3 gigawatts of renewable projects currently under construction. But this, apart from thermal and your renewables, they have other multiple growth levers. Up first, they have coal mining. They have 8 captive coal blocks, means owned by the group. 2 of them are currently under development, but these 8 blocks combined have an estimated mining capacity of 86 million tons per annum. The next part is pumped and battery storage. We have recently seen battery storage being mandated in upcoming tenders by the government itself. They're targeting 8 gigawatts of pump storage capacity by FY30 and beyond, and the subsidy has also issued battery storage tenders of 2 gigawatts of capacity. And lastly is nuclear storage. Now they're exploring building small modular reactors. A concrete announcement is expected in 6 months or so, and they started work on 2.6 gigawatts of nuclear plants. And it's key to note that NTPC has actually a JV with one of India's premier nuclear capacity builders, and they already have a step in the door. But Harsh, let's talk about the KYC ratings.
Yeah, so first off, let's try and break down as to what are the metrics that we look for where an NTPC is concerned. We'll start off with an income statement, then we look at the balance sheet, we look at cash flows, we look at key ratios, and we look at capacity additions as well, because that's going to hold the key. So maybe capacity additions and how that plays out, because one is what they've done in the past, and second is what to expect in terms of capacity additions, which will impact the revenue going forward as well. We look at key ratios, shareholding, street cred and street coverage, along with valuations. So we look at all of that and give you a quick summary on how we rate this company, and thereafter taking a view from Nikhil Nigania of Bernstein with regard to NTPC and with regard to some of the questions that we posed at the start of the show. Let's start off immediately with the income statement. Now, in terms of the growth itself, it's been fairly healthy. You're looking at FY22 numbers, which were roughly at 1.32 lakh crore in terms of top line. It's done that in the 9-month FY25 period. So the growth over the 3-year period has been fairly healthy, 17%. YOY, it's been slightly more tepid, 6%. But if you're looking at margins YOY, they've inched up a wee bit. While it's flat largely, but inched up